So we got to get this done. We got to get some policy. If it's just stable coins and Bitcoin, just those two asset classes, that's a huge win for everybody that's involved in crypto. Huge amount of capital come flowing in.
Hello and welcome to Wealthy Value. In today's video, Shark Tank star and crypto enthusiast Kevin O Leary updates about the current price performance of Bitcoin, importance of regulatory clarity, and when will we see an inflection point for Bitcoin. Kevin also updates about where the price of Bitcoin will go in the next 2 years considering the current geopolitical conditions and whether Bitcoin is going to $28,000 next or if it's going to dip lower. Make sure to stick around till the end of this video where Kevin O Leary predicts why Bitcoin will turn bullish again in the next 6 to 12 months. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
The theory of the inflection point is somewhere sort of 7 to 15%, and then it accelerates. I don't care what technology you look at, that has been the case, including all the way back to pornography. So, I mean, it goes back to when the adoption occurs and how fast it ramps afterwards. But I'll tell you, there's two things holding us up right now. Let's stay specific on Bitcoin. The wallet infrastructure, whether you go centralized or decentralized, is shit. It's just not good. And I'll tell you, I don't mean, excuse my French, it is shit. And the reason I say that is it doesn't hook up to the existing compliant infrastructure for institutional investors. When they buy Bitcoin, it's very difficult for them to plug it in to their portfolio mandates because all of the other assets, the majority of them, get marked to market at 4:01 in the afternoon, New York time. That's not the case for Bitcoin. It just keeps trading 24/7, as we all know. So there's a disconnect to the way that their own compliance departments say, well, how do I monitor this for 24/7 trading? If you're using leverage, for example, or you're not allowed to own more than 5%, or you're not allowed to own more than 20%. There's all these rules by which institutions have to be compliant. So when I talk to these guys about, and the women who manage these funds, they say, look, I'd love to own some Bitcoin, but there's nowhere to fit it in. I don't have any infrastructure. The wallets aren't secure. You saw the Solana hack again. I mean, we got a lot of work to do as an industry to clean it up, whether you believe in the centralized or decentralized model. I don't care. I use them both myself. But I have to admit, like everybody else in the nascent days, I've been ripped off on a decentralized wallet till I got the joke on security. Now it's hard to do that to me. But you have to go through the learning curve, and a lot of institutions just want to plug and play. So you want that rapid adoption. Let's clean up the wallet system. I don't care, both centralized, decentralized. Let institutions decide what they want to do. You know, we heard the announcement that BlackRock's working with Coinbase. That's not going to really change much because there's not many institutions that are going to use the fees that Coinbase has. They'll probably go to FTX or Binance to do that. But I'm not saying Coinbase won't give an institutional pricing, but it doesn't matter. There's no demand yet. We need to fix the compliance that you plug in, whatever register you've got, whatever wallet you've got, works right into your system. And that's the kind of stuff I'm working on. It's not that I'm just watching this policy. I'm going to Washington. I'm banging down the doors where I can. I'm taking meetings with every senator or congressman or woman that'll listen. I'm just one of those private investors that are going to the Hill and saying, look, here's why this has merit. Now, the real potential, we're kind of stuck in a range on Bitcoin right now with 23,000. Big miners are making coin, getting awarded coin around 7,000. So the economics are still there to put money in the ground. But the big opportunity, the mega opportunity for Bitcoin, and why I stay long and why I continue to allocate to Bitcoin, is when we get policy and institutions can allocate to it, sovereign wealth and pension institutions, they'll probably put 50 basis points, which is half 1%, up to 1% into Bitcoin. And that's where you're going to break out of this range. How high? Nobody knows because the demand is almost insatiable. Most large institutions want a position in crypto, and they want the granddaddy crypto. They want Bitcoin. They can't buy it yet. So for all of the excitement when we talk about institutional buyers, I'm also in the indexing business. I service the institutions and the sovereign funds with indexing. And they all tell me they want to index for Bitcoin, but they can't buy it. They don't have any policy. They don't have any compliance infrastructure. So we got to get this done. We got to get some policy. If it's just stable coins and Bitcoin, just those two asset classes, that's a huge win for everybody that's involved in crypto. Huge amount of capital come flowing in. When that happens, we don't know. The first indication would be allowing an ETF with the underlying asset being mark-to-market Bitcoin itself, like they've got up in Canada. That thing had billions in it as soon as it got announced. We don't have that yet. It just got turned down again. And that's why there's a war going on between the SEC and other regulators, a turf war as it might be, on who's going to regulate Bitcoin. We don't have to go crazy. We don't have to get 100 or 10,000 coins. If we could just get stablecoin policy, Bitcoin policy, maybe Ethereum, maybe Polygon, maybe Solana, that would be enough. That would be huge. That's a large amount of market cap just right now in crypto. We got a bill cooking right now just on US dollar and treasury bill backed stablecoin. That was going to be heard in August. It's been pushed till after the holiday, till September. The reason you would care about that vis-a-vis Bitcoin would be if we could get that bill done, and let me give you the nitty-gritty on that bill. It's not that complicated. The initiative started with Toomey and Haggerty. They both had different bills. There's other bills, but it's all around the concept of this. Think about a money market, a Fidelity money market or a Schwab money market. There are rules about how those are built. They get audited every month, and they're not allowed to own assets supporting the money market unit price that have a duration of longer than 12 months. Same thing for stablecoin. It'll be the same idea. Look, if you're going to put out a coin and back it with US dollar, have a US dollar there. And if you're going to use T-bills, disclose how many T-bills you have and what the duration is, and let that be audited every month. Then we'd approve that. And the reason you got bipartisan support for something like that, think about, well, let's pick one, USDC. That's the one that was the most stable during the crazy Luna situation when algorithmic didn't work and it cratered. Not USDC because it was backed by the US dollar. So let's just say those kind of, not just USDC, but any coin or any token or any payment system that's going to be backed by a dollar sticks with those rules. That would be policy. And they're going to treat it, the way they're going to try and get around the whole issue is, USDC or Ether or Tether or any of these things. Are they coins? Are they payment systems? Whatever. They're going to look at it and say, we don't care. Let's call it a payment system, no different than when you're transferring capital. It's going to be the same rules that we dictated in a money market fund, and then let the market compete. And so you're going to have different players with different amounts of T-bills, different amounts of cash. But the point is there'd be regulation for them. And the use of those as payment systems would become global, and it would be backed by the US dollar. That supports the US dollar as the default currency of the earth. What politician, regardless of what side of the aisle, doesn't like that? And so that's the likely first step. When institutions see that happen, let's say we get lucky and it happens in September, that's when the focus goes to Bitcoin. But when it comes to Bitcoin, the floodgates themselves is compliance infrastructure at the sovereign fund level, the Norway fund, the Saudis, the United Arab Emirates, our own states, pension plans. If we were calling that asset, whatever we're going to call it, a commodity or a security, and we got that done, I don't care which direction it goes, why wouldn't you be allocating to any portfolio a portion to Bitcoin, just like you would for real estate, just like you would for stocks, just like you would for bonds? That would really change the dynamic on Bitcoin. And when that happens, you have to make a decision. Do you get ahead of that curve, not knowing when that actually is going to occur? Or do you wait until it occurs? Because it'll be, in terms of price appreciation, I believe it'll be dramatic. It'll be dramatic. You could have a gap up 10, 15, 20, 25% overnight because you've opened up trillions of dollars worth of access to a new asset class. That doesn't happen too often. And I think all of the productivity and all of the people that are working on the blockchain and all the projects out there, and I always remind people, Bitcoin is not a coin, it's software. There's lots of really smart guys leaving colleges that are engineering and moving to the United Arab Emirates or the Caribbean islands. They don't stay stateside because they don't have any policy. So all that intellectual capital could come back stateside. There'd be a lot of things happening once we get policy, once we get regulation. And I think you're right. The timing is probably 6, 12 months, but Katie, bar the doors when that happens. It's going to be really wild.
By the way, would you like to pay zero taxes on your crypto gains? You can do this by investing in crypto with your IRA. Here's how to do it in 3 simple steps. Step 1. Open a crypto IRA account with our friends at iTrustCapital, the world's largest crypto IRA platform with over $5 billion in transactions, over 2,000 5-star reviews on Trustpilot, and no monthly fees. Step 2. Transfer your existing IRA Roll over your employer plan or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. No taxable events mean no complex tracking needed, and security is the best in the industry. All digital assets are held in offline cold storage with the leading institutional custodians Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link in the description below and get $100 in Bitcoin after signing up. So what are your thoughts about the importance of regulatory clarity in the Bitcoin space? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.